Welcome back to Fast Market on the Schwab Network. Now it's time for our cash tag segment. Alex Coffey is here. Now let's bring in the Vice President of Research at Likefolio.com, Miss Megan Brantley, to the show. Megan, where have you been? Whatever I said that made you run away, I apologize. Where have you been, Megan?
I am actually just returning from my maternity leave. So I've got a little girl at home now.
Whoa.
I'm so excited to be back with you guys.
Good to see you, Megan. So we are talking about, frankly, a name that is frustrating for real traders. It's a meme stock. It's a stock that doesn't look like it's got very good data. Megan, what does Likefolio have for GameStop?
Yeah, so I'll be honest, GameStop is not my personal niche here, right? So we had to dig into some mentions to really understand, what is the value proposition to consumers. And what's interesting is when we see a lot of these mentions, we see that consumers like the instant gratification, they like the in-store experience, they like to go in and be able to get their game or get their hardware or accessory or even a lot of these collectibles, and there's a tangible experience element. GameStop also accepts trade-ins, they sell used hardware and things like that in games, and so there's a perceived value there. And there's also a new membership program that gives perks, whether it be savings or cashback and exclusive bundles and deals and things of that nature. So that's GameStop's value prop to the consumer, and that's what consumers who do talk about shopping with GameStop talk about as what brings them in the door. The problem is that now we're seeing, increased competition. Games are being published digitally directly, so consumers don't necessarily have to go through a middleman like a GameStop. And we also see increased mentions of people talking about shopping at places like Amazon or places like Target just for the sheer convenience factor. And so whenever we look at our data, we're listening to how those mentions have changed over time. And you can see here on this chart, these are consumer mentions of, interacting with GameStop. And those are trending down, and they have been now for a couple of years, pretty in tandem with the stock. So mention buzz is down by about 57% year over year. So that's a little bit of a warning sign for us that GameStop has lost some of the hype that it gained when it was this meme stock darling back a few years ago. And we're not necessarily seeing signs of a turnaround yet when it comes to that overall buzz.
Megan, first off, congratulations and welcome back. But, I think that this is kind of interesting. It's kind of the story that everyone knows, right? Which is they were thrown a lifeboat due to the meme stocks. Crazy amount of equity was created in terms of market cap. They could do things to raise capital to try to get to the other side. But what's the other side? I mean, they had some rumblings of like NFTs and things, I think, at one point, but that doesn't seem to be investor interest at this point. So I guess, is there anything here that's positive? Is there anything to be excited about? Because from a fundamental standpoint, I mean, I don't think anybody disputes that it doesn't necessarily merit the valuation it carries. It's just kind of an interesting stock that had a lot of trading volume and excitement. But if that excitement's gone, what's left?
Yeah, I think that one positive you could say is that the bar is pretty low. Heading into this earning, I think that people are just looking for, a narrower loss versus profit. So, the bar is pretty low for GameStop heading into this event. And we've also got a leadership change. They let go of their CEO last quarter. And so there could be some optimism maybe surrounding potential new strategies. I know that investors will be listening for, how does GameStop plan to turn this around and really garner the attention of the consumer again. But at least from our data perspective, we just aren't seeing any signs of real strength from GameStop. Even when we look at those digital mentions, that's an area that GameStop has been trying to lean into. Those web visits have fallen by about 20% year over year. So we're not necessarily seeing the changes to that business strategy take hold yet. We're not seeing the mention buzz take hold. And then whenever we look at consumer happiness, if you zoom out on a big picture of things, that tends to be our most predictive long-term indicator for a company. And that happiness level has dropped by about 4% year over year. It's around 65% positive, which isn't horrible, but it's not great. So I think that for us, there is still a lot of room for improvement before we would have room to believe there's, a big surprise in store for this name.
Yeah, Megan, this company's supposed to lose 14 cents on about 1.1 billion in revenue. They fired their CEO. They don't really have an earnings call when they release their earnings. The Likefolio data kind of looks like the chart of the stock, which is looks like this stock is saying a long goodbye. It does trade volume though, and it does actually move. What else? Is there anything else we should do here, Megan?
No, another area that we can look at from our data is trends. And Alex, I think you mentioned, the interest in NFTs and even some collectibles, and that was giving GameStop some hype in previous quarters. And we're not seeing that sustained interest there. That's kind of lost its luster. So even whenever you look at these macro trends, we're not seeing a ton of tailwinds for GameStop. I will note this is kind of a down quarter. A lot of times whenever we look at GameStop, we see mentions uptick around big game releases and around the holiday season, and we haven't seen a lot of those big releases, and we haven't, obviously it's not the holiday season now. So this quarter, if we were to pick a direction, our data definitely supports more of a move or a bet to the downside. But I will say, because the bar is so low, that any positive news in regard to leadership or, narrower than expected losses may be well received. So definitely important to stay risk defined on this one.
Megan, one last thing, just for the viewers at home, make sure we're all on the same page. Your data typically, from what I remember, is seeking to kind of track how revenue might perform. In a name like GameStop, you can have the earnings results in front of you and have no idea where it's going to go. Does that complicate it a little bit?
It does complicate it, and that's a really good point, because I think that that's contributed to a lot of its volatility in the past. And when we look at these consumer mentions and we look at all these different metrics, we are correlating that to revenue. So whenever we talk about these metrics, we're not seeing signs of a great increase in revenue. I don't necessarily know that extreme growth is expected, but we are seeing consistent declines pretty much across the board in all of the different metrics that we're tracking.
Megan Brantley, Vice President of Research at Likefolio.com. Thank you so much for coming to the show.